Hey folks, doing a sound check. Can you hear me all right? Awesome. We'll get started here in just a few minutes. Well, welcome everyone. We are here live on Wednesday. Thanks for joining. We've got about 150. Room will probably fill up a little bit more. Fair amount to talk about, right? I've been pretty quiet on this whole GME and Reddit situation, and I'm not going to talk about it much today, other than the fact that that was a pretty decent squeeze. And it always amazes me when you see a stock go from, I don't know, we'll go $10, $4 to $400 that you didn't sell. And by the way, hodling won't make the stock go up. So that's kind of interesting too. I see everybody, I'm not getting out. Dave Portnoy, like the guy a lot. I think I love the fact that he'll speak up for himself, his company, and other things. So he's an interesting cat for sure. Not sure he should be trading, but that's another thing. One of the things I did do, and I tweeted out when this whole GME thing started, is I put a portfolio together with a bunch of short stocks. I'm going to probably do a video just for fun, and so you can see exactly how this thing's doing. Two things happen. I'll show you as we go through the show today that I actually got buy signals on GME at $4.25 on the weekly off of our WaveTech system. And then on a daily, the last buy was 20. It's still holding, and we'll see. I'm anxious to see how it gets out just on a signal to signal basis, on a trend basis. So it's going to be interesting to see how this all plays out. But the goal for today's show, at least as I usually do on my intro, is to really cover the markets, talk about what's going on, the big reversal that happened on Sunday night, another terrible Friday close followed by a Sunday night reversal. These patterns are starting to become very relevant. I did, see this happening. We'll go through, like I said, I'll light up screens here in a minute with all of the technicals and stuff. But I just think that we are at a really interesting juncture in the markets. And I made a brief comment in the video last night is there anybody left to buy? And there's some churning up here, but nobody wants to be the bag man. No one's stampeding in like they were when the market's down. So it's a classic. I think what we're entering is most likely a classic sideways consolidation. And I'm sure I'll go through all the details. Our database is starting to come back on a short-term basis. Our intermediate database is still very long, 81% long. So that means basically 8 out of 10 symbols in our database are actually saying that there's an uptrend. And so I'll talk about some of those things. I try to cover that mostly on the channel, and this is an opportunity for me to kind of go into more depth and ultimately see what you folks are interested in hearing about as well. I guess just to wind down through this Reddit situation, it was pretty obvious to me, and I'll cover silver later here when we get into the technicals, but it was pretty obvious that silver wasn't going to move and it wasn't going to be a GME squeeze job. There's a lot of other players out there that are, call it manipulation, call it whatever you want, but there's a lot of big institutional players on both sides of silver. It's an industrial metal, and I used to run a hedge desk back in the 80s, and all we dealt with was producers and the miners. We had several mining companies, and these guys have different motivations than speculating on the price of silver or gold. It's just a different world, and I've lived in that world. It was a long time ago when I did this back in the 90s, but the general fundamentals, the general actions that people that produce or use in an industrial sense doesn't change, and they're pretty static. There's some dynamics, but for the most part, they are motivated by the same things, and what they're motivated by hasn't changed. So that's a tough market to go in and try to do a Reddit manipulation. But let's face it, the GME thing was fascinating and brilliant as you look at it, So I'm sure there'll be some more. The battle between Wall Street, we'll call it Wall Street and us. I spent a lot of years. I've worked in hedge funds. I've been on trading floors, worked at institutional desks, been a head financial analyst at a major institutional firm. I've done all these things, and it's interesting to see where we are today compared to, where we were when I started in the market. So I won't go through that. Maybe one day we'll just sit around and we'll talk and hear about a lot of that stuff. I'll let you guys determine someday if that's what you want to do, a live show and just not talk about markets. So let's get into the markets. Let's start to take a look at some of the things that are going on, and I'm just bringing us in initially here into the screen. We're trying to rally back up again. The futures are up 17 handles. Just kind of been grinding for a while here between around 31 to 38 handle. We've got, those of you who watch the channel for a while, this is a dragon head formation setup. It's a 1 minute chart. So typically what will happen is the dragon head resolves itself into upward direction as it's forming. So we'll see how this plays out. Looks like they might maybe try to move this thing into the 40 handle here. We're trading 35 right now, so it looks like they want to try to move this market a little higher. But as we go over and start to take a look at some of the other markets here, I guess maybe this was supposed to come up first, but this is the SPX weekly, and one of the things that's happening at the moment, 38.24 was the RXT for the weekly. So if we manage to close on Friday above that number, we're going to have a weekly RTX sell signal, which means that we're going to go sideways for a couple weeks, and that would be exactly what I'm seeing here. PPMs are still positive on the weekly, but I just happened to come up. Let's go on a bottom up type pattern and start to look at what's going on here on a daily chart. Start to try to get some context of what's going on, and this is something I talked about in the video last night. But we're seeing kind of one of these mixed scenarios where the PPM1 is actually turning down in spite of being up 0.5%. PPM2 is spiking up through its first and second derivatives here. I'll put a cursor so you can see that here. And PPM3 is also turned down a little bit. And typically what we get out of a pattern like this, we could touch a new high, but it's one of those where you print a new high and then the market trades off again. It's not the type of configuration that appears it's just going to do another run. And I think if we were to do anything, we probably would see it. If we look back maybe 5-6 days from now, maybe 2 weeks, what we're going to see is that we had basic trading range coming in around the 37.50 to 38.50 levels, maybe printing 30. I think the high on the pattern is 38.70. So basically every time we get up at this higher end, we come back in. And that's basically what the PPMs are telling us. There's not a lot of VIG. I talk about that a lot, or a lot of momentum building here. And there's more consolidation, more work to be done. Going back to the weekly chart that we started on, this is a positive chart from the standpoint of the configuration on the PPMs. We have, for those of you that maybe are new to the channel, the PPMs are, let me get something set up here. The PPMs are actually price pressure momentum, and what they tell us is probabilities about prices to hold and trending accelerations and decelerations. I don't like RSIs and stochastics just because they're 0 to 100 meters and they get pinned up at the top, and they just never really did much for me. So I canned relative strength, stochastic, other 0 to 100 meter type indicators and trend lines and all that stuff back in the 80s. I figured out most of that stuff wasn't very useful. Not that you can't use it, you know, but trend lines are pretty subjective, and they start to form opinions. So everything I ended up doing had to do with moving averages, had to do with some Fibonacci ratios, and things that were built off of market prices, not some subjective trend line that I drew on the page. They didn't treat me well, so I had to bail on them. Maybe there's a lot of folks that live and die by them. It's the point of the PPMs is that they tell us when the probabilities are higher for the markets to hold a level or to break through a level. So there's a number of things. So I know a lot of you have watched the channel for a while. So that's exactly what's going on here as far as these indicators go. So as we look at these patterns here, they're bullish, meaning that there's an uptrend, but the configuration of the bars are suggesting that there's more work, more sideways trading to be done. It's starting to look a little bit like the September pattern. It's got a little more strength, and the big strength when we go through the NASDAQ here in a minute, you'll see more about that, because that's really where a lot of the strength in NASDAQ is taking back over its leadership again, and there's just a lot of cash flow going in there. So all right, so let's go to the monthly real quick here and then we're going to switch over and go to the NASDAQ. Monthly chart right now for the month of February, the range, if you look here on the, I still don't have a good tool to blow things up and to make this stuff easier for you guys to see. I know a lot of folks watch this stuff on their iPhones and on their smaller devices, and it makes it a little harder to see. But this overall pattern that we're seeing here, if we look at the market grid, S1 is 36.59. Now, this is the cash. I'm going to flip over to the futures for a second, because this was very relevant. On Sunday night, the low was 36.56. We had an S1 36.42, so we came down to almost an S1 on the monthly. I'm going to back up just a little bit and go to the weekly numbers here. You'll see that the 36.42 number shows up there as well. And then when we go to if we go back to the daily, just want to go back here for a second so you can get it some context. If we go back to the daily, if we look at Sunday night, S2 was 36.45. So we had a 42 weekly, a 42 monthly on the grid, and a 36.45. And I can tell you from doing these videos and trying to get all the context and trying to put things together is really difficult, because I make notes, I do the videos, I edit them and post them, but every once in a while I get through something and I'm like, man, I forgot this, forgot that. There's just so much detail that is necessary to be able to understand and have some context of. And so everything printed down on Sunday night for the most part, to a key cluster of numbers. And those of you watch the channel know that I talk a lot about these market clusters, number clustering around Fibonacci numbers, and all the market grid is a volatility range with some Fibonacci calcs tied to it. And when you start to look at it, and the way that I do my analysis is I'm always looking at daily, weekly, and monthly, trying to compile them into one story. And sometimes I might you might hear me say on the channel that the weekly charts are dominating or weekly trends are dominating, and the daily trend might be sloppy, monthly, weekly are in sync, and all of these different elements of the markets, as you look at different patterns, they sometimes are very cohesive, all together, telling the same story, and then there's a mixed story. When there's a mixed story, it's usually a sideways, corrective, consolidation, some non-trending thing that happens, and the markets are in non-trending mode about 40% of the time. They tend to trend up or down like 60% of the time. So it's those 40% of those times where we get into that sideways movement is where it gets a little more difficult, and sometimes the markets are very highly predictable, and other times it's just a lot of noise. And so this is my effort. I'm telling you about this because this is my effort to eliminate the noise in the markets. So, let's go over to the NASDAQ. So the NASDAQ has pulled back a bit from the extremes it was at earlier. If we go to the cash, we're just going to stick with the futures right now, but they're printing up, and I mentioned this in last night's video, the high so far today has been 84, and we had the high is 584, R1 is 542, R2 is 646, so we're trading almost to an R2. I mentioned this last night. I thought we might be able to print an R2, and there could be an R3 in our future, which would put us up at 1370. But if we look at the big reversal day we had back on the 27th, the high that day was 586. So we are printing right at those highs. So, you know, we'll get the double toppers, and yeah, Levi, I'll try to get through that here in a minute. Let me, if I don't mention it when we get into some of the individual stock stuff, remind me that, if you will, okay? I just want, because I need to focus on the markets here for the moment. But the whole process here, that what we're talking about, looking at the NASDAQ, is also basically a trading range. And I'm going to draw in a couple things. And, you know, we saw a big outside reversal. I don't know if any of you have watched my video way back. I'm not sure when it was now, maybe whenever the Apple split. I did a video on how to short Apple. It was a really good trade, but it was more about the reversal bar, 3-bar trade. I don't know if you folks saw that, but it's a big element when I see these things that drives my analysis and my expectations in a short-term window. And if you learn that trade, nothing else, when you see them, they don't happen that often, but when they do, they really can be both a profitable trade and help you to position in other ideas that you're trying to do. And there's a lot that's going on. So somebody said, we'll have to keep an eye on it, that there's a planned attack on silver at 2 p.m. I saw that when we were getting started. So, you know, if you guys see silver moving, it's up 181 right now. Maybe we'll, you know, get my eye over to that. But I'm going to stay going through my plan is to go through NASDAQ. We'll do Russell. We'll talk about the spreads. I haven't talked about those for a little bit. And then we'll go ahead down and we'll hit the dollar and everything I usually do in the first hour of the live stream. So what we're looking at here on the NASDAQ is really a trading range. And I'm going to draw in a couple things, and we'll go through basically a bottom-up type view of the world. And so this is the way it looks to me right now, is we've just got this big trading range that's setting up. Whether we trade back into the grid here over the next couple of days would be interesting to see what happens. I've mentioned several times during the daily commentary is that my expectation is that we could see some sort of disruption coming into the employment numbers. Now, we got ADP numbers. They came in at 175,000. It was expected to be 50, but these numbers between the unemployment and the ADP numbers are pretty not really correlated very highly. But this is about the only thing that we're going to see over the next couple of days are the claims tomorrow and the continuing claims, and the unemployment numbers are going to drive that. But we also, between those points, we have tons of earnings reports coming out. So there's plenty of more earnings. We saw the Google, we'll go through Google later, up 8% last time I looked. So everything's wonderful in the big tech world. And, so we're still seeing a lot of that cash flow driven there as well. But as we look at this chart here, what we're seeing is really just that big sideways range. We go over to the weekly chart. And we see that we are printing almost to, actually we have the extreme is 13,521, the high is 13,584. So we have traded above the RXT number, so that will be the number to watch on. It was 1824 on the S&P RTX number. RTX for the weekly NASDAQ is 13,521. If we get above that on Friday's close, we'll probably see a couple weeks of sideways, more consolidation, even though we're trading at this high level in the markets here. The PPMs are actually looking pretty good on the NASDAQ on a weekly. We're seeing them all turn up pretty decently. We got a plus 0.96. Anything over 0.25 on these indicators are an uptrend. So we're looking at 0.96, 0.96, and 1.07 on this on a weekly basis. So there's a very robust trend underlying this market. So when I was talking last week or last Friday, the potential for a move down on the S&P to 3575, maybe 3500, that all got negated on the reversal that we saw on Sunday. And I know there seems to be, anyway, there's an element of folks out there, if I say it's going to go down, I have to die by that statement. Guys like Harry Dent and other people out there that have been bearish since 1996. They've been talking about the end of the world forever. That's not me. If I see a reversal, I'm going to call it. That's what I do. Any positions that I had on, I was reversing, covering, doing things as that reversal was happening. And as I said, there was no way for me to communicate without doing a live stream and bringing that up to talk about that cluster at those numbers on the S&P that were, there at that 42 level. So even though we were a little shy of that, once that reversal started happening, it was going really good. If you guys watch, what's his name, Raul Powell, I'm not really a troll, but he went on a big rant on how this whole GME thing was going to unwind and the world was going to come to an end. And that was the dialogue that was out there. And it was like, I think on the Twitter, I put on my Twitter account that was the most bullish thing I heard on Sunday night. It was very articulate, very, very good, very well presented, and very wrong. And, we all do those things. We go on our work and we tell people what we think is going on. But everything I was seeing I was like, wow, there was that guy, there's another guy I follow that's got like 250,000 Twitter guys, and he was just screaming bearish, and I'm looking at this reversal. As soon as we printed over 95, that it was obvious that this thing was flipping around. And of course, we saw it go all that big reversal. Well, this same thing happened on the NASDAQ here. Is the NASDAQ was down, I don't remember the numbers now, like 180, something like that on Sunday night. Everything started to reverse. It was relentless. And if you watch, I spend a fair amount of time. Sometimes I spend more time watching the aftermarket session than the day session, depending on how things are going on here. And so that evening session can be misleading. Sometimes it'll rally overnight, then reverse the next day. But it comes in, and what I try to do with those overnight patterns with the dailies is try to combine them. So when you see something happening, it's somewhat obvious sometimes that the market's going to continue in that direction. And so that's what I'm going to go with when I see that stuff, because that's what you're supposed to do if you're a trader. You don't sit there and ignore a market and say, no, I had an idea, I'm right, they're wrong. You pay attention to what's going on, and you go with the flow, and you go with the data. I also had we also saw some things coming out of our database that did not give any kind of bearish tone for follow through as well. So those are the things that, yeah, so yes, Scott, I know. Listen, I think he's a really smart guy. He's a buddy of my friend Hugh Hendry, and I know those guys hang out and do stuff, and they're real intellectual and all that stuff. You know, I'm just like right now I'm a guy in a jean shirt doing what I do for 40 years, and I have a different context of what I do and how I look at the world. And you know, you get caught. I mean, your analysis is what it is. You just, how fast, and this is something I learned from the trading floors, when you get a trade on wrong, how long does it take you to figure out that you're wrong? That's going to be how well you do. You know, like some of these guys, I saw a post on Reddit. One of the guys that started a GME thing is upside down like $1.3 million, and he's going to hodl. Well, that's just stupid, right? I mean, that's not trading. That's like, we're going to be right. We're going to get, no, that's, you know, and I get, like I posted on Twitter, some guy talking to some of you people that might be younger. You know, I've had the opportunity here. I've been running this channel like this for just about a year now. I've been engaged with retail customers, and it's been amazing. I've met some of the smartest people I know. I've worked with investment advisors and institutions for most of my 40 years, and in the last 20 years, I've worked with investment advisors. I've met a bunch of you guys way smarter than those guys will ever be. Those guys want to play golf and, you know, figure out how to suck on the teat, as they say, you know, and get fees off their clients' money. And there's also really good ones. So I'm not, but anybody that does 60-40 strategies and, you know, does that kind of stuff, and you know, there's a whole dialogue. I'm not going to be a troll on those guys, but this is exactly why when you're doing your analysis, you do what you do, and you folks that are trading out there, you've got to figure out as soon as you can that you're wrong, and you make a decision about it. You don't hodl, okay? You get out and you go for another play, and you know, you just have to have good techniques, and that's why, you know, advertisement alert. That's why we put the WaveTech platform out there, so you don't have to do that. Like I said, I want to see how GME plays out, both on a weekly and a daily, and there's some others in there, and I'm going to put that out there at some stage. I might even throw it on the screen later today here. But, you know, but the point is of all this little rant that one of my rants is I usually do these when I get on these live streams, because it gives me opportunity, a flow of consciousness starts to happen. But this is exactly, you know, when you're trading, you need to figure it out and have good strategies. One of my mentors long ago in the early 80s used to always preach, you know, do trade concentration with a good strategy and make sure you have he didn't care if you're using options to offset. Some way you have to always offset. I worked with the largest trader on a Pacific options exchange. And I can tell you, he never had anything outright. Everything was spread. So he was always playing ranges, 10% ranges on stocks. Now you probably have to, who knows, maybe go to 20 or 25 now when you're doing the verticals and different things of that sort. But none of the big money actually is going out there and doesn't have a very good idea and wrapper around where they're going to buy and sell. So, don't be that guy, don't be that gal that is going in and just hodling just because there's a crowd mentality around. That's the only thing I would say. I've actually, like I said, we're trying to put a lot of this stuff out there so that you folks can have some good process around. All right, enough of that. So let's go and take a look at a couple things that I haven't talked about for a while. And let's take a look at this Russell versus the NASDAQ. It's flattened out about a week ago. I talked about a week ago, I was talking about, I think this spread is done, and it's just been sideways. I still think it's done. I think you're going to pull back more in this spread. I think the NASDAQ leadership, therefore, is going to continue to drive market action here. As we were looking at the patterns just a few minutes ago, you can see exactly that. And that's exactly what is likely to continue to happen on a relative basis. So we go back and take a look at, let's do look at the Russell real quick here. And the Russell has similar pattern. Like I said, we traded up in this range. We pulled back. We went down below the 21 period moving average, not quite to the 40. That's what I thought we were looking like we were going to make it to the 40. The reversal on Monday changed all that. Now we're trading back above the averages. I thought we would trade into the averages, which we have done in 3 days. This is the third day of this pattern. So just know that these patterns that exist on all of the indexes, the S&P, the NASDAQ, and the Russell, probably Dow Jones too. I never look at the Dow Jones. But what they're doing is they're getting this rebound, this 3-day rebound. Today is day 3. It's Wednesday. That's what I talked about on Sunday night's video. We're completing that. Are we going to follow through and punch out new highs and go for another run? I'm telling you, it doesn't look like that's what's going to happen here. It looks like these things are trying to stall here, and we're probably going to come back in the range. With the slope on the 21 being as positive as it is in the middle of this pattern, that's going to be your support levels around 21.18 on the Russell. So about 30, 40 handles below where we're trading right now is going to be that number. Okay, so let's go ahead and see what we can come up with here looking at the weekly chart. Same patterns, same station, same pattern. They're almost at the weekly extreme. I'll bring that on screen so you folks can see the grid. 2168, the high has been 2162. So we're right at that range right now from the standpoint of what this pattern is doing. So we're setting up. This is, just for the record, this is not a bullish runaway pattern, and this is the high level consolidation pattern. And there's the age-old thing that people talk about all the time is really just when you get to these high-level consolidations, is it a consolidation or a distribution? Distribution means it's probably going going to go higher. And if you get this pattern that continues to trade up here, then you get a little heavy and you have to liquidate before you come back in. And I am going to see if I can bring up something. Bear with me 1 second. I'm going to see if I can bring it up on the other screen and bring it in. We'll do a couple things here. This looks like seems to be the right place to do this. So I brought up I brought up the WaveTech tool real quick because I want to show you a couple things here. So I got messages. This is market grid for a bunch of symbols that is embedded into the portfolio manager. What I wanted to show you was the percent bullish that I was just talking about. I want to bring in the database view. So if you can see up at this top table here, we're 81% long. 13,337 symbols are long on the database right now. That means that there's been 13,337 identified trends to the upside. So 81%, 8 out of 10 stocks are going to be exactly yeah, so this is a very bullish configuration. When we go to this all stats page, this is going to show us the buys and sells that happen on the weekly and daily. Last night we had 2,000 buy signals, 2,100. And if we look at the weekly, we had 600 new buys, about 500 sells. So we didn't have much. We had a slight uptick. There's basically a rotation going on here. And this table over on the left tells about the overall database and the expectations as we look forward. So right now, if I go over to the daily models very quickly here, we go to the daily models, we'll see we're at 33.81. This dropped to 27.20 roughly 2 days ago. Now we're starting to see that represents an uptick, this 2,000 buys. So this is stabilizing, and I'll talk about this over the next several videos on the channel, is that we're going to be looking at probably this moving back toward the 42% range. We got another update. Very good chance we're going to get some of these trades to come back on. And for the most part, what was happening because of the cycle that we were in is that we saw a lot of profits being taken. So we were at 70% long, and over the past, we'll call it 7-10 days, we've been selling out of positions, taking short-term profits. Meanwhile, the intermediate continues to be very bullish. And looking at it from the indices, we're trading at the highs. This should be the way it is. Now, what I'm looking for here, which will give me some indication of what's likely to go on, is that we'll start to see on a weekly basis, we'll start to see some attrition of the database, start to see some selling. Well, a year ago, and I've talked about this a lot, what I've talked about is that a year ago we were seeing substantial selling in February. So we're really sitting here right now within 2 weeks of the same point in time where we were seeing selling coming in. Of course, the COVID thing was just starting. Everything was starting to unfold just about a year and a week, maybe 2 weeks. And in fact, I think it was closer to the end of February when the COVID thing happened, because I went to a big giant conference in San Diego, industry conference in February. So it was right after that, everything got closed down, and we've been going through that. But from the market standpoint, from our database, what we were seeing was liquidation. So this is what I've been talking about this a little bit. I think this is a good point in time to talk about this, is that what we need to watch for here is if we start to see that attrition in the weekly and the intermediate database to indicate any type of potential backfilling of the intermediate trends. Now, most of these intermediate trends, they started to come on, most of them in early to mid-April, and then in July, we bought big on intermediate. And those trades have worked really, really well. And that's definitely just what I'm looking for is those trades. And I talked about this, I think, in video. I know we did a WaveTech training session. We do those in private Zoom meetings. But I talked about this yesterday. If we look at the one of the stats that I'm able to do, and I can watch these 16,400 plus symbols, all looking at things from my viewpoint. Otherwise, my data, my trading models, all of that stuff that I talk about on this channel. And so we're looking at what the statistics are, and it says that 201 days is the average holding period on our intermediate. Right now, we're only 70 days in it. So we're only about 37% of the holding period is realized. And we never get to 100 of this, by the way. We'll get to around somewhere between 72, 76% is where it will get. But this is the number that really needs to be watched. We look at the average profit on these symbols is 21.9. Now this is normalized over a huge database of 16,000 symbols, which has ETFs, mutual funds, bonds, and stocks all being looked at just from a signal to signal basis. So this is what the mean looks like from a statistical standpoint. And if we look at this, we're right now 29.75 is the average. The standard deviation is big. Average is 72%, so there's still a potential for that. But when we look at the current average profit, we're at 21.9. Otherwise, we are 74% of the profits have been yielded from these trades. And so what that ends up to mean is that I need to watch this market very closely as we get somewhere in that 80% plus. The daily models, just for reference, the daily models just a couple of weeks ago before we saw this little pullback, it was 70% of the, it was 70% yielded in time, but it was 90% of the trade expectation, or what we were expecting to make on that. 90% had been yielded from the database, and that puppy rolled over, and there were literally thousands of sell signals coming out. And we saw a little minor correction. If we start to see that on an intermediate basis, this is the point. If you're watching this channel, this is the point to watch this channel. When we start to see that, that's going to tell us that the correction will be bigger. We saw a daily, short term, we got a little, I don't know, didn't even look to see what it was, maybe 5-6%, maybe a little bit more depending on how you measure it. If we get this on a intermediate basis, when this intermediate database rolls over, now you can probably go to a 10 to 15% potential rollover, but we're not there. Okay, so don't go, Bob Kendall said this. No, what I'm telling you is we're getting close, and I'm watching for that. And when I see that event happen, I'll talk about it. And a lot of times when you have big events, there's, from a Fibonacci viewpoint, there's some 55-week cycles coming in. I think they're coming in around, I think it is I want to say it's, I'll have to verify this. didn't write them down when I was doing some research a couple of weeks ago, but it's mid-March, maybe 1st of April, which will bring us into also that kind of annual carnage things that were going on in the world at that time. So, you know, it's somewhat interesting. It's hard to tell around COVID. It's hard to tell. You know, think about this. Remember when the vaccines were being announced, when our friends at Moderna and all the Pfizer, it was what, 95% effective. Well, those numbers have been diluted to maybe 80, 75. All of a sudden, reality's coming in. You know, I just wonder who's going to take any responsibility for these hype numbers that they put out there. And if you recall, the market's traded off of those hype numbers, right? Those were big events, 95%. And I remember saying to some people that, you know, what vaccine has ever been 95% effective? It's like zero, right? It's never that. 60%, yeah. 70%, yeah. Not 90. So it's just kind of a hype number. So now we're starting to get into the reality of things, that maybe that 40% of the people that get the vaccine, it's not going to really work, right? So there's a whole lot of variables out there, and the way the news is, the way that the flow of information goes right now, I guess it'll just be dependent on how they're trying to twist things for whatever narrative they're trying to push at the time in the media. That's just how it works, right? That's the world we live in. It's not so anyway, but yeah, so this database will be the key to figuring out when this market's actually going to see a more substantial, the weekly database will be that point where we'll be able to tell when those things are going to happen. And, you know, that's, I guess that's probably the best way to frame that up. Okay. Yeah, so just real quick, just going back to this just telling you, I thought we might move toward the 40 handle. They did manage, while I was talking, to get up to 39.50. So that was probably what I was seeing when we were talking about that a little bit ago. But Dragon Head, we're going to try this high again. We can still see it print over 40 here. High 43.50 on the futures on the level 2 here. You can see that. So we'll just keep an eye on that as we go through the session here. So let's try to accelerate just a little bit. And let's get through some of these other markets. Let's start off by looking at the 10-year on a weekly basis. And this is something that I still believe we're going to see the potential for a retest of the highs that we printed, that surge that we had a couple of weeks ago up to just about 1.2. I think there's still a very good possibility we're going to see somewhere around 1.25, maybe a little higher. But we've got great momentum going on here. We've got PPM1, 2, and 3. So the numbers are 2.9, 2.51, and 1.57. This is a huge uptrend. So higher interest rates. There's a market I haven't talked about for a while, which I'm going to cover here shortly, which we haven't talked about crude oil. There's actually been a lot going on there. And we'll talk about that in a minute. But the this pattern that's going on in the 10-year is very substantial. When we take this time frame and we go out to a monthly, this 21-month moving average is at 11.7. But if we look at the PPMs, that's over here. The PPM2 is about to take out its second derivative, which means that we're going to start to move toward the 40-month moving average over the next several months. Now remember, each bar we're looking at here is a month, and that's so, you know, we're talking about a 12, maybe 18-month period that we're going to start to move towards 1.9, and maybe we'll get a surge here. It'll happen faster than that, but it's going to take a number of bars, at least 8 to 12, maybe 12 to 18 bars to get to that point. But this sets the tone for some of the rotation that we're already seeing happen in the markets. And that rotation is actually going to the financials. That rotation also is the energy starting to come into play a little bit. And those are, you know, these are all areas we're going to need to watch fairly closely as the markets unfold as we go down the road. Now, energy is pretty easy to figure out. We'll go over them. Let's just do that next, since I was talking about it. I've talked about this a fair amount. Let's start off with the daily trend has been really moving, you know, going straight up here for a while. We're printing 55.68. Well, that's easy, right? When you shut down a bunch of, you shut down the oil business in the U.S., prices go up. So, you know, and I think the new administration is just getting started and shutting down the energy production in this country. So we're going to see crude oil go up. We're going to see gasoline go up. We're going to see all energy costs go up. Maybe the goal is to push them so high that we have no choice to do alternatives, you know. Solar works pretty good here in Arizona. We have a lot of sun, but there's a lot of limitations. So it is what it is. But this is definitely happening here. We look at the daily, we're up 164, 55.70. Let's go and take a look at the weekly chart here. And we're moving up, and I talked about this months ago, that we were going to move toward this 200-week moving average. That is at 50 bucks. I'm sorry, that's STX. Let me move that up. Not 50 bucks, it's 60 bucks. There it is, 60.40. And that number is most likely going to be hit. The one thing that is happening on a weekly basis is we are above the RXT number, 54.40. So if you have some attention for crude oil, if we close above 54.40 on Friday, look for at least a sideways. That does not mean it's going to reverse and there's a giant sell signal. All it means is that we're going to see a sideways. The trend will stall, and typically what we'll do is go down to an S1, S2 in the grid. So if you have the grid for crude oil, you can see exactly what those numbers are. But, you know, I'll try to talk about this, but we're definitely look like we're heading to the 60.40 level. If we go out to the long term and we go out to monthly, that 200-month moving average is way the heck up at 110. And that's not likely that number is going to be hit, but the 40-month moving average is 60.27. I've talked a lot about this, and the reason why I just saw this, Scott. It is now INX on the sheet. It's not SPX. Yeah, so look for INX on that sheet. It should be instead of SPX. I had to change symbols. I worked with a programmer yesterday to try to fix some of the issues with the grid. But back to markets, this monthly, so I talk a lot about this, is the 40-month moving average and the 200-week moving averages are going to be very similar. If you think about it, calculations are very similar in that there's four, actually it's a little different here. We got four bars in a month, and you're looking at 40, so it's a little different on the daily and weekly. They match up really good in that there's, you know, especially on a daily, there's 5 days in a week. And then so the 40 and the 10-month, the 40-day and the 10-week moving average match up. But that same thing happens through the flow as we go from daily, weekly, monthly using 10, 21, 40. There's a reason why those numbers were picked, and they're all simple averages. I don't like the exponential stuff. Yeah, I don't. I don't use the 50 because in our research in 1984, we found that the 40 recognized the patterns that we were trying to recognize more than the, yeah, that was just the average that came up. We didn't have any bias about 40-day or 50-day average. Everybody uses, you know, 50, 200, didn't do that at all. And in fact, I had just started researching and using the 200-day moving average in the last couple of years. I found it more useful than I thought. I kind of rejected it just because it's way too mainstream, you know. So, but that's the reason for it. We chose the 10, 21, 40 moving averages in the analysis because they mapped out to the Elliott patterns. WaveTech is a combination of moving averages, the momentum indicators, the PPMs, to determine probabilities, but also they confirm wave counts as well. And so we use the 10, 40, 10, 21, 40 moving averages. They mapped out to the Elliott patterns that we are recognizing better, and they were simple, and that's why we use those. So we needed a really short, we tried 13, we tried all the Fibonacci numbers, we did all that stuff. This is 1983, 84 when we did that. And we just found that these averages mapped out to the analysis that made the most sense within the context of Elliott patterns, all those type of things. And, you know, so you can, yeah, you can see like this, what am I on here? Monthly average. I remember when crude oil was plummeting back in 16, I talked to everybody about this ultimate convergence point that we would move back toward this, that we saw stability, but this is the reasons I use those. Yeah, so just to continue, just to make sure I answer that question right, is yeah, so the concept is that we're looking for that the 21 bar always, the 21-week moving average establishes the primary trend direction. So the PPM that's measuring that, you can see where I'm charting right now. If you can see the middle PPM, we won't go too deep in this, but the middle PPM is actually seeing a crossover when the market started to stabilize. This told us that the penetration, this suggests that the penetration of that 10 and ultimately the 10-week moving averages, this is monthly, the 10-period averages, doesn't matter what chart it is, it could be a 5-minute, is going to head toward the 40. And then when we saw the crossovers down here on the 40, these were telling us that the probabilities were that we're going to rise above the averages. And that's why I watch all these numbers, percentages, and I've talked about this before, this is the angle of attack of the markets that we're looking at. So when this is declining, it just tells about the trend and the probabilities of that trend continuing. That's really what that's about. So, okay, let's do let's go kind of jump around a little bit, but let's head for let's go to the Dow next, and I want to go to the daily first. This is that same pattern I'm just talking about. This is the 40 period moving average. Different length of chart analysis is the same. Is that once we got into this range here, we started to see the PPM start to rotate. That basically said, okay, these averages are now most likely going to be penetrated. The trend's going to switch, and that's what our wave tech models do. Is they're looking for those probabilities, and when they do see that, then that's what they're going to. That's when they're going to put a buy signal out. So typically, we get a buy signal in this consolidation range, roughly, on a wave tech model. So we're looking at a switch in the trend on a short-term basis, and all this flows out. This is 200-day moving average up here, but so the Dow, and I talked about this a couple of weeks ago, it looked to me like it was setting up a pretty major bottom, that we played this thing out as far as it can go. There was a time, I think we get down to 89 handled. The extreme possible a couple of weeks ago was the 86 handle, and that would have been the buy of the century probably. So let's go to weekly Dow. This is part of that same configuration. I guess we're getting into a PPM educational stuff, but we're seeing the first second derivative on PPM1 get crossed. We saw that happen back here, was telling us that we're starting to see those signs of a trend change. And then down at the bottom here, we're seeing the PPM 3 is actually turning up through its first derivative. So where we're set right now is that we're likely going to head toward 91.85. That number's still dropping just slightly, so it'll probably end up being 91.60, around that level, maybe 50. And then that's where, once that pattern sets up a little more, then that will tell us that we're most likely going to head toward the 40 week moving average at 93.80. And so this pattern is setting up this bottoming pattern here that is likely to move us up at least to that 40. Whether that 40 trend will be able to, downtrend will be able to be broken, that's yet to be seen. But for the moment, we're definitely seeing that this thing can get a bottoming pattern to set up that is likely to lead to at least the 21, which is 91.85 or 91.16. Above that, 93.80 is probably more like a 93.40 to 60 range is what's likely to happen there. So this is beginning that process. So it's going to be very difficult, because I'm going to go to the metals next, for the metals to go too far right now with this type of configuration. Although I don't think, as long, let's go to a monthly chart here so I can make this hypothesis. So we look at the monthly, we've got substantial downside pressure on PPM1 is at a minus 0.84. That number is at 93.29, similar to the 40-week moving average. So that's going to be a major resistance point. And I don't think that if the Dow did move up to a 92 or 93 handle, that's going to have material effect on gold and other things. I think gold, it will just keep gold in a locked into a pattern. I don't think it's that kind of rally in the Dow would be enough to crush the Dow. Above that level, then we're starting to look at more of a material effect, especially on gold from that standpoint. But for right now, if we just look at the market grid for the monthly on the Dow, we're looking at 91.14. The high's already been 91.31. Next level, 91.75. So that would start to move into that numbers I was talking about on the weekly. So it looks like over the course of the next 4 to 6 weeks, we're probably going to move at least to 91.75, maybe 92.37 on this pattern. But for the most part, we're going to stay inside of this market grid on a monthly at the moment. So let's go ahead and dig into gold. So let's back up and let's start with the daily. You know, this thing's not going to get out of its own way. If we look at the PPMs here, there's a lot of downward pressure on gold. We had a shot about 4 or 5 days ago to actually move up to the averages, which we did over here on the 29th. And what that got us was quite a bit of resistance. We tried it the next day, didn't quite make a new high. And then, of course, we got the big down surge yesterday, and that was probably generated mostly from the action in silver that we saw. And then today, we're just kind of really trading at the lower end of that range. I mentioned in last night's video, and these are the numbers that are on the screen here, is that S1, 1825, we saw a low of 1830. That was the same low when I did the video last night. So we've not managed to make a new low. We're just trading between this 30 and 45 level. And I suspect there's enough pressure here. We look at the PPMs are accelerating, that we should see as we come in the next day or so, we're probably going to see an 825, 1825, maybe as low as 1808. So this is going to stay under some pressure here as we come through this pattern. If we go over to the weekly, things become even more obvious, and this is, I still believe this is overall a really bullish pattern that is developing here. It takes a while sometimes in gold to really play these patterns out. I think ultimately we need to see the grid actually tighten up a little bit more before we're ready to see a reversal. But same thing here. This is the number 1822, 1807, similar numbers that are on the daily sheets right now. And so there's not a lot to go there. If we just look at the Fibonacci numbers, 1889, 1920, numbers I talked a lot about on the channel every day, that we're just locked in here. The good thing that's happening here is if you look at the PPM1, it is actually turning up, which I mentioned, I believe, in last night's video. These things all blend together. 1858.90 is the 10-week moving average. So there is a bit of, with this upward slope of this PPM telling us that gold wants to be at 1850, 1858, and it's just not going to get much above this 21-week moving average at 1883. It's just not going to happen. So at best case, if we got back above 1860, we'd be locked between 1860 and 1880. That may even be a tall order for a moment, but I do like what's going on in PPM1. PPM2 is still down. We're going to need a couple more weeks just staying sideways, and this thing will start to turn up along with the PPM3. So the weekly pattern is coming into play. It's not there yet, okay? And we go one more level, mustn't just go all the way deep on this thing. The monthly chart, this is not a bullish chart, so there's, from a monthly standpoint, this is what I call almost like a classic dragon head, but this thing has got a lot of work to do. PPM1 is still positive, but it's turning down. PPM2 is starting to roll. So there's multiple months of work to be done. Just looking at this chart, there's at least, we'll say 2-3 months before the gold's going to be in any place to do anything. All right, so let's flip back to daily. Let's go through silver. Silver daily, I mentioned this, and commentary a couple nights ago. We got an STXL. I tried to warn everybody as we were coming in that day. I believe the market was already up 6% when I was doing the video overnight. And it was pretty obvious. I said, watch for the STXL. We got it. We had the big sell-off yesterday. Now we're getting, usually when you get a big sell-off like yesterday, a big bar like that, you get an inside bar. So yesterday's low, 26.30.15. I'm sorry. Yeah, 26.35. And today's low, 26.54. And the high is 27.26. So we're going to trade in this range. PPMs are actually positive, and I mentioned this, and I had some of the trolls out on the channel telling me that it was just going to go straight up through, we got the 30.50, so that's going to be your pivot number, 30.50. But the grid tells you there's something else going on here. It's going to go into a trading range. We're looking at multiple weeks of consolidation here. Let's go to the weekly. This potentially is very damaging, this pattern here. The positives are that the 10-week moving average, or the PPM1, is at a plus 1.69, so that's pretty bullish actually. And that number's at 25.55. So if you were going to buy silver, I would be buying it there. And evidently the 2 o'clock planned onslaught on silver didn't have much effect. Maybe we could look at a short-term chart and see what happened around there. But this is potentially a reversal, and if we were to close below 26.38 on Friday, this would be almost a given that we're going to go down to that 25.55 level, and at that level you may be able to buy it, but we could even see a print down to 25 even. So don't, we'll see how this thing closes on Friday, but like I said, the trigger point would be a close below 20, let me make sure I got this number right, 26.38. So we close below that. It tells us we should get some follow through next week. And then, we'll probably see like an R1, whatever the numbers that come out, R1 will be the probably minimum upside target. S2 on the downside on the weekly will be the target on the downside. Maybe, like I said, I'll probably end up making little comments when necessary on the channel, as this seems to be something that a lot of folks are watching. So we'll do that. We'll go ahead and take a quick, we'll go ahead deep into, this is the other chart that just, this is a pretty bullish pattern longer term. So silver on a longer term basis has got a bullish pattern. The 10-month moving average, 24.11, going up about $1 a month. So that's going to put us at around 25. Some of those numbers I just mentioned on the weekly are going to be the places that you actually want to pay attention to. So I think those are pretty good setups that I talked about if you're looking to play this market. But this thing is just, man, this pattern is a pretty tough pattern. I mentioned, I think in a tweet or in commentary or something, that this is just a very sloppy pattern. It's not a clear, defined pattern that you can call really easily. So there's going to be a fair amount of noise, and that's why, as we just went through daily, weekly, monthly, it's pretty obvious there's a lot of noise in this market. Okay. Since we're doing all these things that we've been doing, let's just hit Bitcoin. Let's do, that's interesting. Litecoin and Ether's just running big time. They're been much more active. But I talked about this a little bit. This is a daily pattern. I think on Twitter I put something out a few days ago. This dragon head was forming and we're looking for a breakout. We did get a little bit above the grid, but momentum is very strong here. This is a pretty decent trend. The 10-day simple average is going to be a point you can buy off of. We've seen this thing hover above here. The PPM1 is at 1.17, so that should be pretty decent. We're going to have to go to the weekly chart to try to get a little better analysis as far as that goes. Yeah, so this is where it gets a little tougher, is when we get into the weekly trends. We now see that we're going to set up, and I talked about this, I recall last week, is we're going to see it go into this giant configuration. Matter of fact, I'm going to draw in what I would expect to see happen with the market grid. So what's likely to happen on this market grid, it will start to collapse a little bit on a weekly basis, and then we'll get into, you know, something like you know, some kind of pattern, which is, this is my dragon head pattern, and typically what happens, you can draw a line down the middle, you'll be hovering on both sides of the line, so the market grid on a weekly basis will be in combination with a 10-week moving average and a 10-day moving average. You can use this grid to trade off of on this thing, and it will be very useful, but you're going to be buying and taking profits. There's not any next level trend in place as far as this goes. But if we go over here and let me put on a study, let's put some Fibonacci projections here. Yeah, how many of you remember the video I did back here in, I think it was November or something, Bitcoin 23,000. That was from these numbers over here, 23,721. I remember, and actually we kind of halted on this bar right here at 20, went to 24,295, and then we had this explosion. I thought, I'm just looking for something right now. I thought there was some numbers somewhere that I saw that were, yeah, here it is. This pattern here, this dragon head pattern, is actually projecting some pretty crazy prices. If you see here on high target 1, 54,000, 64, and 69. Now these could be negated, but this number right here is your big pivot number, and I mean 38,201. If we close over 38,200, then the next level will be substantially higher and will be 54,700. So, you know, you look at all it's amazing to me, all the folks that have been completely wrong on Bitcoin over the years, and somehow CNBC and these apps will put them out as like some authority, and they've been wrong forever. They've never been right, and yet they're putting these stories out there. So anyway, but the PPMs looking here on Bitcoin are pretty positive. Like I said, on the daily, everything looks pretty good here. Let's take a look at Ether because that's in a runaway. It's interesting. I didn't cover, but back here on 115, the target on Ether was 1645. We hit, let me get this number here. 1653 has been the high. This is daily for today. The next level is 1928, so there's potentially another level on this. The PPMs are just starting to accelerate, so this is got some serious potential here. Just go over to a weekly. Weekly is not as clean, but lots of acceleration, and we're trading on a weekly grid. You'll see R2 15. R3 1642. We've seen a 1653 high, so we printed an R3, and we did get on this RTX sell signal. We did get one and a better part of the second week in a sideways. We did trade into what I told you is S1, S2 is where these things go. So it doesn't. Those signals don't necessarily mean there's a top and it's rolling over. It's just signals that the market's going to go into this sideways range. Okay. What time are we getting to be? Almost 1. So it's getting time to maybe crank up. I think I've covered everything I normally cover and just going through all these markets. So that was good. Feels like I got a lot out. There's something I want to bring up something here real quick. I want to bring up the volume on all exchanges, total volume. And, you know, we continue to see some crazy things. And I keep promising you folks that I'm going to do something. I'm making a note to myself here is, and I'll probably add something to it. I recorded a conversation I had back in, I think it was December of 19. It might have been January of 20. But I do want you folks to hear it. And the thrust of it is, this was, if we go back to these old days, we were getting total volume in all the exchanges was about between 2 and 3 billion. You can see this is pretty average. This is a weekly. Yeah, that's fine. And as we came into last week now, all of a sudden we saw a almost 14 billion share day. And what I was talking about is because of fractional shares, not just, it's not just Robbinhood that offers fractional shares. Charles Schwab does. Interactive brokers actually do it. A lot of folks do it. So this is becoming more and more available, which therefore was going to bring more people into the markets, which would cause the volume to quadruple. And that's pretty much what we got out of this thing, is a quadruple in volume. And so, we're seeing volumes down 22%, but most of the volume happens in this next hour. So we're probably going to be off. I think yesterday, if I go to daily here. Yeah, so here it was the other day, was that spike to 13,838. And then we've been dropping off for the last few days. And I suspect we're going to be back around 7. You see normal, if we go back in October, then we were around 4 or 5. And then we see these spikes, and it's been the case. And when we see these volume spikes or these patterns here, we also seem to be coming into some minor highs at that point too. There seems to be some climactic action that happens at that time, and that's something that I watch for a lot. So here's what we're going to do. It is time. You guys give me some stocks. Tell me the things you want to talk about, and let's do that for the next half hour, 45 minutes. Yeah, I see Jay talking about COVID. That's true dedication, folks. Thank you, Jay. All right, let's hold up there. That's quite a few. I've got quite a few that we'll go through here. So markets are just a quick market review, and then we'll go on. As you know, we're looking once again. We went up to about 40. We're back at 33 again, so not a lot going on here. Just kind of drifting around up here at these levels. All right, so all right, let's dig into some of this stuff. We got to, folks, we got to start off with GME, right? I want you to see what we got on, what day was this? 127. Got a RXT sell signal, 2 to 3 days sideways in back into the grid. We saw that huge spike that day. What was the range? 483 to 112. And then, you know, we saw all this stuff. One of the things that's happening here on a daily is we're hovering right around the 21 period moving average. Wow, thank you, man. Richard Strick, thank you, man. That's very cool. Thank you. But yeah, so this is, we're probably going to do just like we did yesterday. We traded between the 21 and the 10. What we're seeing here is the 21 period moving average. The PPM2 is at a plus 0.445. It's going to take a few more days for this thing to bleed off. It's probably going to be support around 98, 90, 98, maybe print down as, what was the low that we saw, 85, 75, 85. We should manage to stay above that number with this kind of PPM. We'll see if it, even in this wild craziness, that this stuff works. The extreme down here is for a move to 55, 65. We get down there, that'll do it. One of the things I was going to show you over here is, let's put up GME on WaveTech, and it's going to come up on a weekly basis just so you can see exactly what happened. Is GME shows a plus, which means it's still long, and it shows that on this is the daily models. It bought on 113 at $20, closed yesterday at 90, So up 340%. So we'll see. I want to see how this thing gets out of here off of this craziness. See what goes on. If we flip this over to a weekly, you'll see that it bought long before the Reddit folks did. It bought on 6/15 of last year at $4. Actually, I want to go to 3.2. 1.2 bought it at 4.50. That's one of our models. The other model bought it at 4.25. It's still up 2,000%. Of course, it was a crazy number before, and but this is it'll be interesting to see how this thing plays out. Okay, from that standpoint. So that's that. We'll do AMC because I just got to do this. I mean, AMC, same thing. RXT sell signal. So if you had the grid, it was well over the grid. Next day, big down, sideways, and we're staying also above the moving averages here with the PPMs off the map up 7.30. It takes multiple days for this to bleed off. So like I said, I built a portfolio with these things in there. So okay, on to real stuff. I don't know what, as you guys know, here is LEU, which is Centrus Energy. Getting RXT sell, what is this, daily? PPMs look awesome on this thing. There's some high price targets around $40. That's a big number. Let's look at the weekly. Weekly's got a bit of a dragon head, but this is the key number to watch here. Simple 10-week moving average is all you need to know here. And I'll bring that up over on the screen. You've got the extreme 25.47 for this week, but the key number is simple 22.39. That's going to be your major support number. You got 5.89 ppm1, ppm2 4.83, ppm3 is also a big number as well. So hopefully that's helpful. Yeah, so I had to put Nokia up real quick. I forgot that. You can see that big spike there. It's above its moving averages. We'll see how that one plays out. I think I built a portfolio in on our platform. No, I did not do Amazon yet. I'll write it down. So let's just do Amazon. So Jeff Bezos is out. As I said in my video last night, you know, who cares? Obviously nobody. But we're looking at down 1% here, down 33. So, but we did get up on a weekly basis to RXT 33.84, high 34.34. So definitely it was like $100 above it. Right now we're at 33.47, so we're trading back below that. The PPMs, however, look pretty good, and these dots that you see up here are projections for higher prices, and those price targets are for minimum target 35.75, 3,800 on this stock. So it still looks pretty good from that standpoint. These other objectives have been negated, so these are reasonable. This 35.75 is a reasonable number here to expect. Okay. I don't know if there's anything on a daily or not. Let's just take a look. Yeah, we're kind of dealing with this RXT sell a couple of days ago. We went up to the extreme. That'll happen the day after a sell. Now we're coming back into the pattern, and those S2 number 33.40, 33.20. So we had a low of 35. So that's usually the target range after that. So, like I said, the things that you want to watch here are actually pretty easy. The simple average is 32.96. That's going to be a key number to play off of, and then go to the weekly analysis that I just talked about. Yeah, Scott Sanders, as far as the S&P goes, you know, I still think we're going to grind out. I went through quite a bit of detail on that earlier, so if you didn't get to see that, look at the replay on this live stream later when we finish. But yeah, so it looks to me we're stalling up at these levels, but I did a lot of analysis there. Let's do CCL, see what we got here. Good old Carnival, right? Let's go to weekly. Pretty mixed, but this is an interesting formation. We're hovering around the moving averages. I would say this thing is trying to turn higher. This is a recovery trade. This is a vaccine trade. It's something. I'm not sure what all's going on there from that standpoint. I don't really see necessarily a trade here, but if you're a WaveTech user, you might be able to put that on there and see if you can get a bounce. I really don't see anything there from that standpoint. All right, I covered silver, but I'll just bring us SLV here. This is weekly. SLV has got a big reversal. So, you know, I would say on the replay, go through the silver, the gold and silver analysis, but it looks obviously is the same. We got a reversal going on a weekly. If we close down below 24.61 on a weekly, that's going to be negative, suggesting we're going to probably see further downside. And as in some of these others, the 23.72, 23.17 level is going to be a potential place where you could buy that. But I think there's going to be depending on how we close on Friday, if we close below that level, then there's going to be several more weeks of consolidation before anything happens there, for sure. Okay. I must have wrote down some of these symbols wrong. So this is the 20-year Treasury. I went to the Treasuries a lot over there. So this thing, because yields are looking higher, you can see the downside right now is for STX 149. So we're trading 149.42. The low's been 49.81. So we're pretty close at the bottom end of the range. The positives of this, it's consolidating here, but the analysis that I talked about in the treasuries a little bit ago reflects that we should see higher yields, lower prices here. The target 140, 146. Extreme would be 141. So nothing good. PPM's rolling over. Everything's pretty negative. PPM 1, 2, and 3 all in trend levels, only to the downside. All of that. Here's BG, and it's trading up at its weekly RXT. That number is 70.71. Last is 70.16. The high was 71.05. So we've actually printed up to that range. Let me make sure I got everything right here. Yeah, 71.05, 70.71, last 70.18. So watch for a close on a weekly basis above that level. But overall, the trend is still up, but we're similar trends to like when I talked about the NASDAQ and the S&P, is that we're in this high level consolidation phase, and it doesn't look like there's going to be any push sharply higher out of here. But it does look like another 2 weeks of consolidation, but in general, this thing is looking higher on this thing. Yeah, it's interesting. I'll bring up American Airlines, but I also am going to bring up the Buffett strategy that I built last May live on screen, and we've been following since last May. Okay, let's do that. Let's go over here, and I believe I have the right account. And this Buffett Airlines, this is the short-term strategy I built. It was up 102% last year. We actually introduced this in the beginning of May, right when Warren sold all the airlines. We got in big. June was a huge month, 56%. We were out in July, and then we've been in and out and been just kind of hovering. Most of the money was made in that front end of this trade up in this big surge. So we've been chopping around here. But right now, of the 9 symbols that are in this portfolio, only one is long. And if we look at the open positions, who is that, you say? It is American Airlines. And it's not actually doing very well, but it's long, and it's here at 16. I'll go back and do the analysis here. But this is interesting because most of the airlines, it looked like we were going to get another run. Of course, all the talk of the vaccines and all that stuff. But like I said earlier, the interesting part of the vaccines is going back to when we first found out about them, Pfizer, Moderna, you name the vaccine that came out. And what we saw was, 95% efficiency. Well, now we know they're probably in the 60 to 70% level, just like every other vaccine that's ever been out there. So, who knows whether the efficiency of these things fall even further. So we'll see what happens there. But let's go back to over here and take a look. There's really not a lot here. When we look at this weekly, we go to the daily. That's the signal that we were just looking at on that. Here is the daily. So it got caught in this surge, looking like it was going to go up, and then we backfilled. But overall, we're seeing the PPMs turn up on a short-term basis. So I suspect if you're long that, I don't know who asked for that, if you're if you're a WaveTech user or not, maybe you are, that this trade should try to resolve itself. It looks like it's trying to turn up. The weekly is very neutral, so not a lot there. Let's keep going. Let's go to Softy, Microsoft. Here's a daily. Decent trends going here. We never got an RXT sell in this sequence, but we are also trading at these high levels, right? This is daily. Let's go over to weekly just so we can get a better view. So this is the all-time levels here, 242 high this week, 245. So we managed to print a new high. We're at 243. So, but what's interesting about this is there's a live Fibonacci projection for a move toward the 296 level. So that's pretty substantial. And if that happens, guess what? The market, everything's going much higher in the pattern. There's no doubt. Yeah, somebody commented about the VIX on a weekly basis. Let's just go to daily here. VIX a couple of days ago got RXT sell. We came back in. Here we are in the averages. There's doesn't look like we're about the, maybe we can continue down to the STX number down in the lower 20s, something like that might be the case. Thanks, HDAM. Appreciate it, man. Yeah, not a lot here on the VIX. Even when we go to the weekly, it's just basically what you'd expect with this rally. So maybe we'll come back into the range. We're actually below the STX number on the weekly, which is 2572, and the last is 2359. So if we stay below that, we could get an STX buy signal, which says we will come back in toward R1 on this number. 34ish or so would be the R1 number. So that would indicate the possibility of this thing moving up. Okay. Got it. I guess this is part of the Reddit crowd, BBBY. So we didn't quite get an RXT sell. This is weekly. Hang on, let me go to daily. Yeah. It's interesting. We didn't get RXT sell this day, but we did get it on the 27th. And it was a nice signal. We're back hovering. These PPMs are not as bullish as the ones on AMC, GME, and Nokia. Those are much more powerful from the standpoint of the trend. Okay. We haven't done it, but we're going to do it, which is Apple. I want to get rid of this thing here. Apple had some interesting objectives here, and I remember talking about this a couple of weeks ago, or last week. This pattern was suggesting that we would see a rally 141 to actually the numbers 141.70, 47.58, and 51.20. And we look at where we got right into that range. Looks like we got to a high of 45. So we got right into that range. We backed off here. We actually had some lower targets in this pattern as well, which were 127, 132 to 125. And so we printed down into those ranges. So we're kind of range bound on this one. There's not a lot there from that standpoint. We look at the weekly chart. The 10-week moving average is the key here. 130.05, low today 130.93. We should stay above that. PPM1 at a 1.38. So that's a bullish number. You can buy against 130 with that kind of rate of change of this PPM1. That is going to be plenty to get that. And you also see PPM2 trying to turn up. So a lot of stuff when we start to look at this, I'm just going to throw in stuff. I'm impressed that you folks didn't ask for this stuff, but I'm going to throw in Tesla. Tesla got a weekly RXT sell back on 1/8. And we did go sideways for 2. We got a reversal down. Now we're back doing an inside day. We're also forming a dragon head, which tells us we got few more, maybe 2 more weeks of consolidation and the potential for this stock to continue to move higher. That's, crazy patterns. Let's look at the short term. So similar to what we're seeing in the indexes now that Tesla is part of that crowd, it is definitely definitely in this upward sideways consolidation. There's no doubt that is what's going on here. The weekly charts still tell a bullish story. So the probably the best number on a short-term basis, 837. Another 20 handles down would be a pretty good point to play off of. But we're in the sideways range. You can almost draw a line down the middle of this and buy below and sell above the average price of this last deal, and that'll put you really at that 850, the 10 period moving average, something like that. There's EverQuote. Someone asked for this. This is the daily. I got a little dragon head flowing, but really positive trends here. 10 period moving average is going to be the demand line. It's at 44.34. It's going up about the better part, about 80 cents per day. I would use that simple 10 as a potential stop. It looks like, let's go to the weekly to see what's out there on that. Yeah, weekly looks like it got, it got a RXT sell last week. So, but we are trading back up at the higher end of the market grid, 49.43, high 48.70. So we're trading just between R3 and RXT. So this thing's played out for the week, but PPMs are all bullish. This is an uptrend, and there's more to this one. I don't see it rolling over. On this case, 44.16 is a pretty good number to pay attention to as far as support. All right, so we're just doing it. Intel here. Intel got the RXT sell, got the reversal the week after that, and now we're just into this sideways range. And I suspect, like I talked about this as we go through these individual symbols, is that we're going to see these a lot of these markets are just going to stay in this sideways range. We're not going to see them move much outside of what the grid is suggesting here. It's really volatility from that standpoint. I just don't see that being anything major going on there. Here is Navarix. Someone just asked for that. This is the weekly. We got an RXT. We've seen these before too, back-to-back RXT sell signals, which, believe it or not, when you get 2 in a row, they kind of negate this. But what's likely to happen here is that this thing will move back into the range a little bit. This is a tough one. If you own it, congratulations. We can look at a short-term signal here. Yeah, so we got here's exactly what I was talking about. Back-to-back RXT cells usually negate when you get the second one. It's like this thing's going higher, and so you're seeing this explosion here on this thing. There's no Fibonacci projections right now. Let me go back to weekly. I just wasn't paying attention. Yeah, nothing out there as far as Fibonacci numbers or anything out there that you can really pay attention to. Yeah, I just brought up BTN. This thing's exploded. This is weekly. We've already traded up to 200 week. Yeah, I mean, this was almost a double. If you if you know what's going on with the stock, maybe there's something to play. I really can't help you out from a technical. Here's the monthly. Maybe, yeah, these are pretty insane spike out of here. So this 40-week moving average, which is still down 285, is going to supply a lot of resistance. Traded above it, 297 is that number. So we're probably going to be in a sandwich job between 184 and 297 on this stock. Looks like there's some volatility going on here, to say the least. Yeah, you can catch Amazon in the replay. We're going to tag it up so you know where it is. Once we get the, it takes about 20 minutes or 10 or 20 minutes for the video to render. And then we put on a timeline what we were talking about on each thing. Yeah, so Charlie Schwab. This is probably one of the beneficiaries of, I talked a little bit about our friends at Robbinhood, and I'm not a hypocrite. Close my account, okay? I just think what they did was ridiculous. But Schwab is obviously a beneficiary. Fidelity has been a beneficiary of this. So the big players, people are moving over there. So, so much for Robinhood. I made a comment on my channel that Robinhood should change their name of their app to the Sheriff of Nottingham. So they did some really bad stuff. And by the way, I just want to make a comment about this just in Schwab. We'll go back and talk about Schwab. There's a monthly graph on Schwab here. But there's no doubt that Robinhood had a monster bad liquidity crisis, even though Vladimir said no, they don't. They did. Why do you raise $3.5 billion if you didn't? And basically what you saw happen from the standpoint of Robinhood, they sold out to the hedge funds. The hedgies own this thing now. So where did that money come from? I didn't hear that Joe Biden sent the money. So I'm assuming that these there's a couple hedge funds they've been hanging around. They had to probably, as founders, I made the comment on Twitter, I'd like to see where their founders' holdings are now after this last tranche of capital, because they were just bragging not that long ago they did 1 point something billion, but they did 2 tranches in the last 10 days, and they were big tranches. So they sold a big piece of this company. I don't know that it was dead or what it was just yet, but anyway, the dust will settle on this thing and we'll know. But a lot of folks have exited out of there, a lot of upset customers, and folks are going to swab. So I'll go back and talk about that. Let's go to the weekly swab. Yeah, we're seeing some backfilling here. We did get an RXT sell on the 8th, and so it's not like this has triggered this big rally back into swab or anything, but they are a beneficiary of the movement out there. TD and swab are the same thing, and so a lot of this money is just being switched around on the street. So as far as 10-period moving average is still positive on swab, so it's going to try to stay above that. We're just a little bit below it now, 53.90. We're trading 53.77. So that should set up basically the pivot zone on that 10, a little bit above and below. You can just look at probably an R2, S2 number on this one, looking at the grid here. That's going to be your ranges that are likely to play into. Yeah, this one comes up, I think every week, maybe the same person asked for it. Let me see if I can get to shorter term. Got a RXT sell yesterday. Couple of days sideways. Looks like PPMs are pretty good. There's just not a lot of data on this thing to be able to make a lot of analysis. Hopefully in the next few weeks we'll have plenty of data, at least on the short term. Yeah, I did Bitcoin. I did also Ether as well. That'll be on the replay. Yeah, I was pretty disturbed by the Robbinhood thing, and I know you folks don't know me. There might be a couple people on that have known me for a while, but going back to 2008, when Bear Stearns had an issue actually it was 07, in July of 07, when Bear Stearns had their little snafu, they advertised it as they were having a margin call issue. And I've been involved in running 3 broker dealers in my life, and one more substantial than the other 2. The one was very small. One was a personal BD that I ran to run my business, and then one was a much larger, where we had about 1,000 reps. And all I can tell you is, you never, ever, ever, ever call the SEC unless certain things are going on. And when the SEC gets called, it's usually because the company's under cap. And one of the BDs I ran is what they call a nickel BD. You have to have $5,000 in the bank to keep good standing with that. If you drop below that, then you have to report that you're under cap. Well, all BDs do have a cap, and part of what the CEO at Robbinhood was talking about is true. There are capital requirements, and especially when you start to add leverage and you're giving the people a lot of leverage out there. They could have just simply did something much simpler, is if you have a cash account and you're not going on margin, then you can buy it. You can buy as much as you have money for. You just can't margin this stuff. And that would have been a different story instead of going, buying 5 shares. On one of the wild days, I was able to scalp 5 on 5 shares, right? I was able to scalp like $70. How nice would that have been if you could have put some size on, right? So that's the problem with their actions, is they really throttled everything down. And the only reason why they did it, I would tell you, it wasn't as malicious maybe as people think, but they were having a capital issue, and the raising of capital is exactly what happened there. So I can just tell you, having run broker dealers, that the only reason why you call them is you got a problem you don't know what to do with. Otherwise, you don't call them. Okay, what time we got here? 41. Yeah, market's selling off a little bit here. We'll just take a quick glance as we're coming into the close here. We're seeing some selling here. Not a lot. We traded from about 39 on the futures back to 30. Just nothing here. Yeah, the market's up 12 handles, up 17 on cash. Just not a lot there. Yeah, so somebody's asking, I'll do this while we're coming into the close. And as always, around 8 minutes to go, we'll focus in on the close, and we'll watch the close together, and then we'll close down the stream for today. But I appreciate everybody being around today. So let me just, let's go back, and this has been asked for several times. So AMD, this is daily, and we're looking at, really interesting because AMD, let me go to weekly here, because AMD was a decent player here from the standpoint of back a few months ago. You can see where we had a nice rise going. Basically, all we're doing is consolidating here. PPMs are trying to turn up, but there's no trend here at all. The underlying trend on the 21 period moving average, 86.27, is major support, but basically this thing's locked in the range probably between 91 and 86. Another week, maybe, if we can hold this range, we can start to set up a pattern that will move higher, but it looks like a consolidation. There's so many stocks. One of the things that I get a feel for when we go through a lot of these stocks is there's so many stocks right now that are actually in this upper higher end consolidation, which is exactly what's going on with these indexes. We saw this big reversal off of Sunday night's lows on the futures, on NASDAQ, and in all the indices. And then we're snapped back into the high end of the range. And now you're calling up, say, hey, you guys want to buy? And nobody wants to buy up here, right? So that's why we're seeing this type of action in a lot of stocks, the indices, all that stuff. We're just seeing a flattening out here. Yeah, ES is now, just looking at the futures, they're still up 12 handles. They're not much going on there at all. It's just kind of flat. But yeah, so that's exactly what's going on. Yeah, we didn't do NEO, did we? Surprised that one just came up. So here's the weekly NEO. Definitely got this pattern that's folding up. This thing is trying to roll over here, but most likely sideways range. 10-week moving average. This is a weekly chart. 10-week moving average. Simple is a 51.84. We got a little reversal coming, but this thing's going to be stuck take a note. Let me make sure I got it up here so you can see it all. This market grid is probably going to be about the same coming into next week. So you might want to mark down this market grid, whoever asked for that. And yeah, so that's going to be your key number there. This kind of pattern here, we've seen Tesla end up trading in mostly in this type of pattern. So yeah, Alan, we did. I did a in-depth silver on the rebroadcast. You should be able to find that pretty easily. But yeah, this is interesting. This is kind of an ugly pattern here that's developing in this stock. You got RXT sell back on the 25th. This is daily on PLTR planter, and get some spikes up into the grid. Now it's starting to consolidate. This grid is collapsing, which is actually a good sign. In this 21 and 40 period moving average at 33.64, we're below that, so that's going to be a resistance, but the medium or the 21 is 29.33, and the 29.33 to 28.06 support level should hold. That's also down at the bottom end of the grid numbers, and as long as this continues to stay in above those averages and we see a consolidation here, you're going to be in pretty good shape. And we go to the weekly, there's not a lot of data on this symbol, but we are seeing most likely this is one of those patterns where we get kind of what I call a double head formation, which was we're going to be in a very broad range here. You can see this week, if we look at the grid numbers here, I would look at those numbers and maybe jot those down to use those to trade off of. R1, R2 looks like a good range for the numbers right now. So that's 3960, R1 3727, S2 3076 is going to be pretty good. Maybe 2843 is an extreme in the pattern. What time we got here? 48, 12 minutes. So I brought up CMT. Interesting, there was some Fibonacci projections on this one on a weekly basis, and those numbers were for a move to 1470 with the extreme of 1903, and we got up on right here to 1492, and we backed off, and now we're stuck between the 10 and 21 week moving averages, 1314. On the upside is resistance, 1126 is going to be your support. That should hold. There's also a 200 week moving average in there. Let me bring that up so I can see what that is. That's 1103. So I would say look for trading in between 11 to the 13 level, something like that, up to that 1308. This is Rockets. It kind of this got the RXT sell back on the 25th and it put us in this range. So, but all you got here is the 2061, 2086 support numbers. If we look at the market grid here, 2006 is S2, should probably hold that level. But this is kind of sloppy, but we do have good underlying numbers on the PPMs. They are in trend levels. So those first numbers I mentioned, that 20 on a daily basis, that 2061, 2086 should be pretty solid support. What was the low today? 2117. So that should be pretty good support there. What time we got? 150. We can keep going here. Yeah, so uranium, this is a good one. Thanks for that. We had some high-level Fibonacci projections up here for this stock at 1832 to 2074. We haven't reached those numbers. We did get up back on 1.8. This is the daily. We did get up to the 1704 level. Got an RXT sell a couple of days ago, second day of the sideways. So I would look for this thing to print back up toward R1, R2 in the pattern. And so we should see an S1, R2 probably for tomorrow. These numbers will be fairly similar just because of the range that we've been in. In fact, we may see a slight contraction of the market grid, which is always a good thing when that happens in this kind of configuration. PPMs are moderately bullish. Let's take a look at the weekly. Yeah, so we're getting a weekly RXT sell completely. So if we close potentially 1549, we close above that level, then that's going to set a couple weeks sideways. But it's going to be sideways at this 15 handle. You know, 10 week moving average 1506. So you should stay above 15. So this is going to be sideways move. There can still be some upside, even though if we get this close on Friday. So it's Wednesday. So keep track of that number. All right, let's go over and take a look at the yeah, I do actually, if you watch my daily videos, I'm pretty good at showing you the ES market grids, especially daily for the most part, SPX, and the market grid for all the indexes should come out on the daily YouTube videos. So that is the place to find those. So here we are, 27, selling a little bit here, coming in to close. We're up 9 handles. Not impressive, folks. I have to tell you, I don't think this is an impressive close so far. There's nobody looking to buy this. I advertised on Sunday night that we'd get a 3-day rally. This is Wednesday, the 3rd day, Monday, Tuesday, Wednesday. And here we are kind of fading into the close a little bit. You know, we'll see how this thing plays out here in the next few minutes. But I'm not feeling the love. I don't know about you folks, but I'm not feeling it here. And I do think that, you know, if we're going to see a lot of follow through, then that's going to be interesting. Like I said, I've set this up all week that I thought if there's going to be anything wrong with come into the markets, it's going to set some negativity. It's going to be the claims numbers. It's going to be the continuing claims. I still think the continuing claims are going to kind of keep down ticking, but for the wrong reasons. I think a lot of people are just stopping to look for work again. And then on the employment numbers on Friday, the ADP came out at 175 this morning, but I'm not sure that really matters either from that standpoint. So, but yeah, so we're trading 26s now, trying to 26 handle as we're coming into the close, and we're definitely yeah, it's kind of all over the place. 26, we're back to 28. So this is a typical close. We're going to get into a tight range, and what we look for, if you haven't watched the live stream before, and we look at the patterns that we're coming into on into the close, is always watch the last 2 minutes of trading to see what kind of selling or buying's coming in, and then the first 2 minutes on the futures after the cash closes will usually tell you how the institutional money was squaring up their positions for the end of the day. Now, today was really a lackluster day, to say the least. We were positive, but it really didn't have a lot of elements in here. So here we are back at the 26 handle again, 26.50. So we're just kind of waffling in this sideways range, as you can see on the chart here. Yeah, so still just kind of flopping around here. We got about 3.5 minutes to go. So we're coming into that critical zone. So I always focus you folks on there, because I'm always disappointed if I don't get to see this last, what we're about to watch together. I like to see the action. It tells me a lot about the institutional money and what's likely to happen. Yeah, there are plenty of earnings coming out tonight, big time. And then we come into the numbers in the morning, and a lot of these big companies, just like we saw yesterday, we saw the markets actually respond to most of what we saw overnight, Google and some of the other biggies that came out yesterday. 25.50 prints. We're down to about 2.5 minutes, so we're almost in there. So some general selling coming in. We're in the final 2 minutes now. So we'll see what we print as a low into this. And the final minute's really serious. We should see on the far left of the screen, you'll see the level 2 and the size, and you can also see those in the histogram that's on the right-hand bottom of the screen. Shows us what kind of liquidity there is. There's not a lot of liquidity out there at the moment. It's the last minute. We really should see the bid-ask sizes get up to 300 to 500. In the old days, it would be 1,000, 1,500. Today there's not a lot of liquidity around. As I'm saying, we're printing down to the 6 handle, 5 handle. Here's 550. So we're coming into that final minute right now, and we're really not seeing the increase in volumes. Here's some 200 by 300 kind of stuff. Here's 5 prints. A little bit of selling on the close today. Here's 4 1/4 print. Getting some activity, but not a lot of size. Here we go, 2 prints, 250. So definitely some selling on the close. All of a sudden, the futures are up 4 handles, 3 handles. There we go. So we printed down on that last print down to 21. So now what we watch, and we'll spend another minute or so just watching this, is the see if there's any short covering after that selling coming in. So we went from 21 to 375 here, 4. So we're getting little buybacks. There's 450, 475. We'll see how this thing plays out. We're just about through this minute. We'll let it go, and I'll do a couple stocks and we'll wind it up. Yeah, so back to 525. So most of this stuff got covered up. What this actually does, I'll try to explain this, and this is, for me, a significant thing to watch here, is what you get a feel for is all the ETFs, mutual funds, all these guys have to square up their books. They have buying and selling coming up. A lot of this is all algorithm driven. Used to be in the old world where I came from, that used to be very mechanical. You actually had to put orders in and do stuff. This is all being done on digital, computerized algorithms that are putting these orders in. So they have to see what kind of stock they fill, what they were selling, to balance those. They were hedging some of those positions. So there was obviously some selling coming in. They did the futures sell, and then they buy them back after they get the fills on the stock. So basically, it was a pretty nothing close from that standpoint. We had about a 200-point range. We did print down into the close, but nothing significant that there was anything to give from here. Now we're trading above that level at 650. So enough of that. But that's the only reason I look for that, so I can get a feel to see if there was any heavy selling coming in or buying on the close. It gives you a pretty good indication of what's going on. Okay, I'm just kind of looking to see what you folks are talking about a little bit here. Yeah, one of the things that I wanted to look at, and I talked about this earlier, is how the volume ended up. And let me flip this to a daily. So we were up less than 1%, but the last 3 days have been into this around, let's see here, what we end up with, 9 million or 9 billion shares traded. So these are big numbers here, lots of heavy volume, and I've talked about this before. If we look back and go into this, I'm going to try to draw this in because I think this is something to pay attention to. I look at volume a little bit different than I think a lot of folks, but so we got this little bubble building here on the volume, and you kind of see this is actually the market grid on volume. Usually doesn't come into play much, but it does show you what's going on. This little hump in the volume is significant, and typically these come in at in and around climactic areas, which what I'm saying here is that they're probably, what we're looking at is, even if we end up making new highs in this thing, I think that what we're looking at here is, a big distribution. There's a lot of stock changing hands, and if we go back to last week in some of these numbers, we had a 14 billion, we had a 9, almost 10, and then we've been in this 8, 9 level lock for last week. There's a lot of stock changing hands, to say the least. So I think this is definitely some distribution going on here. Whether this can ultimately grind it out, we'll see. We didn't get much. What did the cash end up on? Dow Jones up 0.12. Composite actually ended up flat to down on the cash. NASDAQ down 0.34. So whoever said they got the SQs, good job if you did them pretty well. SQs at 1307. And SPX up 0.10. So ends up to be a non-event today. And what we saw was this completion of this little 3-day pattern. So this will be interesting. Those of you that have followed me and know that what I do is I take literally once the close happens, I'm going to finish this live stream. It's in and out Wednesday. Go get my triple protein style, and then I'll come back into the office and work on the video later this afternoon for tomorrow. But I do think this is the completion of a pattern that we're seeing here, and we're still seeing a little runoff come into the volume right now, 9.1. So we're still printing in the final close, and this is why I talk to you folks about watching a close. It just gives you such an insight. So this is the runoff, which is all the orders being filled that's coming in, and they're reconciling all the books right now. And it's interesting because I have that bell. That bell has been in my head since 1979 on living on exchange, on and off exchanges for a lot of years. So I love that bell. What I miss is the 5-minute bell and the 2 and the 1 minute bell and the final bell. It kind of leads you into this. It builds this anxiety up. Okay, it's happening. Even though now we don't. In the old days when we closed the markets, we closed the markets till the next morning. And it's not like that, as we know. We get to trade virtually, 24/6 almost. So anyway, let's see here. Yeah, man, I think I'll tell you what I'm going to do is I'm going to go over here and I'm going to do 3 stocks that I see here, and we'll just so here's open door. This is daily. Get some price objectives here of 31 to 35. Let's go weekly real quick. So I'm going to do these real quick. Just a quick glance. Not a lot in this one, but this thing's going to be stuck in this trading range here. So mark down these market grid numbers here. And this is going to be probably R2, S2 is going to be a range 2860, 2363. So I'd watch those numbers right there are going to be the key numbers. So Spotify, which I couldn't do without, by the way. I love my Spotify. I always joke that with Spotify, I can always have a teenage flashback. I'm an old metalhead, so I can always go back and flash back to a lot of days of old. So anyway, Spotify is kind of is rallying around the 10-period moving average here on a weekly basis. That's going to be the demand line. Probably the extreme will be the 290 to 328 is going to be the short-term range, and it's in this consolidation range, which, as I talked about earlier, this most of these patterns are exactly where they are. They're stuck in this range along with the indexes and all this stuff. So we'll see what kind of activity we get the next couple of days. And Shopify, I guess we're Spotify, Shopify, and we're getting the RXT sell signal on weekly. If we stay above 1203, we're 1224, even down 1%, we're still above that number. PPMs look pretty good though, 168, 139, 156. They're pretty strong, but just like I said, all these stocks are stuck in this range, and that's exactly what it looks like we're going to do. So let's do this as we end today's show. I just want to put this out to everybody. If you want to support the channel, you want to support, but also get a great amount of benefit. This is the sales pitch, okay? Is to go to the kendallreport.com/wavetech, sign up. We prorate the month. There is no trial on this, but you can also go to /portfolio expert and get a trial of our expert. There is a trial on that one, and that's something you can do there. So you can get the WaveTech platform, which gives you all the database and everything that I talked about. Not to mention, I think I actually built here just doing. I thought I did. Maybe it wasn't on this account, so unfortunately I didn't. But anyway, you can get this platform, or you can get and come over and get our Pro platform, which is Portfolio Expert, and you can build portfolios like this that beat the S&P from 2019. The S&P's up 40%. This thing's up 360. And one of the things I'm going to be doing, and I talked a lot on our private Zoom meeting yesterday, is I'm going to be showing you folks how to do a ETF hacking. And we went through a basic course yesterday. We're going to show you how to be your own manager, how to rebuild ETFs. And my closing sales pitch here is that the goal is, if you want to beat Wall Street, you have to stop paying them and all the internal fees on ETFs and all that stuff. I can show you how to eliminate all that stuff and do a much better job. So anyway, thanks for watching today. I really appreciate it. So I will be signing off now, and it's great fun. I know a lot of you folks appreciate it. I enjoy doing these things. I enjoy being engaged with you folks. So, smash the like button and go from there. All right. Thanks again.